Hey Johandrie, how's it going?
Well, and yourself?
Yeah, good. It's good to have you here. Today we are going to be talking a little bit about being married in community of property. And let's start with the very first question being, what is being married in community of property?
Yeah, so being married in community of property in South Africa basically just means that all assets and liabilities acquired before marriage is then added towards a joint estate, which is shared between spouses, and then any received during marriage, then applies the same rule. Basically, that assets and liabilities also then added to that joint estate.
Cool. So how does this affect each person's tax?
Yeah, so SARS has clear guidelines as to how that will show on your income tax return, but basically what that means is that certain forms of income that's received is then split 50-50 between spouses. That then means that half of your spouse's income is added towards your taxable income. And then it's also very important to note that when you file your income tax return, SARS then requires your spouse's details as well. So just very important to note that you should have your spouse's taxes in order as well.
Okay, cool. And could you provide some common examples of split incomes?
I think interest received will be a good example of that. So essentially what that means is if you, for instance, receive 100 Rand interest in a savings account, then 50 Rand of that will be taxed in your personal capacity, and then 50%, or 50 Rand rather, will be taxed in your spouse's capacity. Same applies for dividends. Being married in community of property, that income will then also be split between the two spouses. If you have a rental property, doesn't matter who the title holder is of that or who receives the rental income, that income will also be split 50-50 between the two. Then, of course, having that property, if you sell that capital gains will then also be split between the two spouses.
Okay. And is there any type of income that will not be split, or are there any tax exemptions to consider?
So general rule of thumb there is that basically any income derived not from any asset in the joint estate will not form part of the split. So a good example of that is a salary that will not be split between the spouses. Then another one is any income received from a sole proprietorship. That's basically where you have a business in your personal capacity, such as consulting or freelancing or even crypto trading will not be split.
Okay, cool. And in your professional opinion, would you recommend being married in community of property from an administrative perspective?
I don't think that is necessarily something you think about when deciding to be married in community of property, but there is of course certain advantages to that as well. So for instance, if your spouse's taxable income is much lower, basically at a lower tax rate, then if you can distribute or split some of your income towards that lower tax rate, that will of course be tax efficient, and then in a sense lower your taxable income as well.
Okay, awesome, man. Thank you so much for sharing today. I believe we can take so much away from this. Thank you for joining.
Thank you for having me.